All right, here we go, everybody. 1 second. Okay, here we go. So starting the stream a little bit late, so I do first and foremost want to apologize. But man, what a crazy day for me. Really crazy day. But at least we're able to get to streaming now. I think it's 9:30 at night, so it's Thursday. Already Friday tomorrow, so hopefully you guys have plans for the weekend. Little bit of a crazy day, a lot to unpack on tonight's stream. We won't cover too much. I'm gonna save a lot of that stuff for tomorrow night's stream. Quite frankly, because it's already really late here in Manhattan. But in jest, markets got hammered today. But the more concerning thing than just talking about the equity markets or the stock markets is the action in the bond market today. So yields took off, but right at about 1 o'clock, 2 o'clock, did anybody notice the price action in the bond market? Not just in the US bond market, by the way. So I usually watch the 2-year, the 10-year, the 30-year note. And yields were off to the races, but we had a sharp reversal right around 1 o'clock, 2 o'clock. We'll cross the street here. I'll just give everybody a quick update on where we are. We're near the Holland Tunnel. And another observation, look at all these cars. So I was working down here, and the traffic is still pretty backed up tonight. But right around 5 o'clock, I'd say to about 8 o'clock, this was bumper to bumper gridlock traffic. And I haven't seen that in a long time in the city. And I think it's because on Tuesdays and Thursdays, from the traffic patterns that I've been noticing, is when everybody commutes and goes into the office like for their 2 days a week. Traffic was crazy. So I guess that's a good thing and a bad thing, right? The good news is people are coming back to the office. The bad news is it's just in time for the $5 gasoline. But we were here at the Holland Tunnel, Lower Manhattan. Going back to the bond market for a second. We touched on this a little bit yesterday. But I'm very concerned about what's going on in Japan. And I'll summarize the reason why. We're coming up on Spring Street, by the way. Very fun area. This is going to be like completely redeveloped. So if you could see, I believe this is the Dominic on Spring Street. Almost every other building here is completely remodeled or brand new, open within the past couple of years. But here's the crazy thing. We heard from the Federal Reserve, obviously. We heard from the European central banks, which we'll talk about them. We'll talk about Christine Lagarde and all the gang over there at the ECB. But the Japanese are taking a completely different approach. They're actually still continuing to do quantitative easing, and suppressed rates. But did you see the big blow up in the Japanese bond market today? For a little bit of homework, it's a free account. You could create it at tradingview.com. It's a free piece of trading software. And it's a very good charting software, very good. Hey, Sonia C, thank you so much for the $1 Canadian or CAD donation. I appreciate it. But everybody, go to tradingview.com. Go over to the bond section and scroll down to that Japanese 10-year. And look at the explosion in that yield today. But it reversed almost 100% of its gains. So this has me sort of thinking what's going on here. And if we go back to what the European Central Bank said, they said something along the lines, and I'm paraphrasing here, but they're extremely concerned about fragmentation and essentially an explosion in the debt market across Europe. So they had an emergency meeting yesterday, in which case they are going to talk about a new set of tools that they can deploy to deal with this crisis. Now, we don't know what those tools are. That we don't know, but it's a little bit concerning that, well, maybe I guess At some point, we'll find out what those new set of tools are, but check that out. I want you guys, as a little bit of homework, because obviously we talk about it on the stream all the time, everybody's always fixated on the stock market. Everybody's always fixated on the stock market. If you turn on CNBC, you turn on Bloomberg, something like that, everybody's like, oh, the Dow's down 800 points today. And I think the only real reason why they use the Dow as a metric is because they can sort of glorify it a little bit more. And what I mean by that is the Dow's only 30 stocks. But if you have a headline, oh, the Dow's down 1,000 points. Okay, the Dow's going to be down like 3%. But if the NASDAQ is down 3%, or the S&P 500 is down 3%, what's a better headline? Oh, the Dow is down 1,000 points, or the S&P is down 100 points. So I think that's why they use the Dow. But in any event, the most important thing to look at is the bond market, because once we have an uncontrolled sell-off in the bond market, which I think we may be on the verge of, I'm not sure if central banks can step in here and sort of control what's going on in the debt market. I mean, we've seen yields just go parabolic, but I don't really want to say good news, but the good thing is we did have a sharp reversal in a lot of those yields across the board today. But guys, let me see who we have in the chat. I apologize. We're off to a little bit of a crazy start. I mean, man, today was a wild day at work. I'll tell you guys about it. Hey, we have Bianca M. Good to see you, Bianca. Mothman says hello. Good to see you. FredX is here. Vinny Castellano is here from Staten Island. Hello, Vinny and Maria Castellano. Sally is here. Says, hey, Tom. iShark says hi. Good to see you. The ABX girl from the Bronx is here. Always good to see you, the ABX girl. Hopefully you're having a good Thursday. Jonathan Richards. Jeff says, hey, walk. Sonia C is here. Hey, Sonia. Daryl is here from Chicago, Illinois. Good to see you, Daryl. Bagels and Walks is here. We are standing right outside of the Holland Tunnel. Aussie says, before the Federal Reserve, the USA had 300 different currencies. Nako says, Tom is talking fast today. He must have had a coffee. Sally is here. Ken Glass. Welcome, my friend. Wanye Cass says, hey, Tom, good evening. Jay says, I went 75% cash 2 days ago, says Jay. Jonathan Francis says, hello and good evening, Tom and chat crew. Good to see you. Hey, Kirby says, sightseeing plus discussion equals great stream. Well, thank you for that. Once again, everybody, do apologize for the tardiness in starting the stream. But I'm working on a really, really big deal with the healthcare company. And essentially what they're trying to do is find a device that is compatible with their telehealth software / RPM software. So one of the challenges that we always have with this are, let's say if you're a big healthcare provider, right? Very large healthcare provider, and you want to deploy remote patient monitoring solutions as well as telehealth solutions to all of your clients. Let's just call them customers or patients or whatever you want to call them. That's a good idea, but the cost scenario can be very, very steep, especially if you're providing like an LTE data connection to all of these RPM devices out in the field. So the devices that we have currently on the field with the pilot program, with this particular customer, very big multinational company, the bloatware on those devices are racking up data charges. And I knew this would happen. So when I was first proposing the deal, I gave them a couple options of devices and they went with the worst choice. And I told them, I'm like, look, we don't recommend this because these particular, if you're gonna use like a traditional like smartphone as a hub to collect all of this information and data, you're gonna have a lot of the bloatware in the background, which is going to eat up the data charges. So like you'll have your weather applications, you'll have like your sports in the background. Crazy amount of traffic here tonight. So this other product that I was positioning was an actual device with a MediaTek module that was actually built for and made for healthcare. So essentially you're able to white label this particular device and there's no bloatware. It's essentially a clean device, in which case you can provision and custom build it on your own. Obviously that's gonna be a little bit more expensive. They didn't wanna go that route. So now they do wanna go that route, but here's the problem. The prices went up 25%. My cost went up 25%. So we're trying to work that out. And if anybody deals in like enterprise sales, these are extremely long sales cycles to begin with. So in order for us to get approval from the department heads, you know, this could take another couple months. But we're running up on a deadline here of deployment. So we're working with this software company called MedicSign. I think they're based out of Finland. And they're doing a really good job at trying to help us out. But at the end of the day, sometimes from what I've noticed over my sales career is customers can try to save a couple pennies up front, and it costs them extreme pain in the long term. So in any event, you guys don't want to hear about that, but that's what I've been dealing with today. But we are optimistic. I think we're going to get some things moving. Beautiful, beautiful view of the World Trade Center tonight here, lit up in red, white, and blue. And a crazy amount of traffic. So we're actually going to be walking across town. We're going to be walking across Canal Street. Yeah, Naliko says penny wise, pound foolish. Kilo Whiskey Juliet is here. Good to see you. Daryl says, hey Tom, I'm watching you and Action Kid at the same time. Hey, AK is live in Miami. Very nice. Western Mass Dave says traffic madness. Dave, if you think this is bad, you should have seen it at like 5 o'clock. It was crazy. And I think the traffic patterns are becoming a lot worse in New York, because you'll have like Tuesday and Wednesday being a little bit tame for the traffic. But now that people are coming into the office, let's say twice a week, from what I've noticed anyway, they tend to come in on like a Tuesday or a Monday or a Thursday. So from my experience, Thursday has been like the craziest traffic day in New York. It has been nuts, especially here, because obviously you can access all of the tunnels. You can go back to Brooklyn from down here. You got the bridges, which we walked across the Brooklyn Bridge. You have the Manhattan Bridge over here. And you have the Holland Tunnel if you want to get out of the city and go to New Jersey. So let's see how crazy packed Canal Street is. Wow, yeah, the cars are still going all the way down to Canal Street. You know, I bet the cars are all the way stacked up back to the Manhattan Bridge. I guess we'll find out as we walk down there. Hey, sunshine after rain, good to see you. Lady O says, hey Tom and everybody, good to see you, Lady O. Always a pleasure. Hey, Action Kids says, I'm live streaming, listening to you at the same time. AK, welcome to the chat, my friend. Hopefully you're having a good time in Miami. I'll be back in Miami pretty soon. I should be back in Miami on Monday. Please God. The flights have been crazy. We've been talking about that on the streams too. I was doing a little bit of research into it, and supposedly the volume of flights are actually down. So check this out. Supposedly, and this is just from a select few articles, I read an article in the Financial Times that was talking about how the overall volume of domestic flights in America are actually slightly down. So when we're talking about having the airports being extremely, extremely packed, when we're talking about the flights being packed, it's very possible that it's because, you know, number one, the shortage of pilots we've been talking about, the shortage of skilled labor, but also overall, generally, the volume of flights are also down. Michelle K is here. Good to see you. Welcome. Joan is here. Welcome. Natalie says traffic might be for the Paul McCartney concert at MetLife Stadium. You know, there was somebody telling me about that. I think somebody yesterday in the chat was talking to us about the Paul McCartney concert. I forget who it was though. But everybody, check this out. If you look straight ahead, you'll see the beautiful Jenga building. Very, very unique building here. Sanjay says, hey Tom, do you like New York City more or do you like Miami more? That's a good question. So I like New York City more during the summer, and I like Miami, Florida better during the winter and the fall. Mainly because I just don't really like cold weather that much, so I guess you can consider me a snowbird, I guess. Is that what they still call them? Ah, Cindy Foley, I knew it was you. Yes, yeah, my daughter's there right now. Well, even though traffic's bad, it is good to see things picking back up. Hey, Brad's Brains says that has been precisely my belief. When you fly, every flight is packed. I believed it was due to less volume. Yeah, Brett, and I didn't know that, by the way. The only reason why I was doing a little bit of research into it is because I couldn't wrap my head around the amount of delays I was experiencing. And I should be flying again back to Miami on Monday. So what I'm thinking about doing, here's my strategy. And let me know what you guys think. From now on, whenever I fly, I'm not gonna book a late flight. Because here's the thing, what I try to slam all my meetings during the middle of the day and then go to JFK, or if I'm in Miami, I'll go to Miami International right around 8:30. But I've noticed about 2 hours before takeoff, I always get a text message saying, oops, sorry, the flight is delayed. And then I get like 4 delays, and then I wind up taking off at 1:30 in the morning. So I think I'm gonna start booking my flights around 1 p.m. And if we continue to see these delays, I should take off when I wanna take off, which is around 8:30. So I'm gonna give it a go on Monday. I'm gonna book a flight back to Miami at about 1 p.m. In which case, I should take off right on time at 8:30 p.m. What do you guys think about that? Hey, photos from around New York. Good to see you, my friend. We're walking down Canal Street. And we may walk through Soho tonight. I think there was a little bit of an accident here. That's another reason why I don't drive, everyone. I don't want to deal with the accidents and fender benders and the insurance. Mets fans' first flights of the day tends to be the best on time. Jay says, sounds good to me. Western Mass Dave says, wish you all the best on your plan. Noodle says, I hate it when my flights are delayed. Same here. So we're passing Green Street. So all the major market indices were down in the deep, deep red today. So across the board in the S&P 500, the NASDAQ, and the Dow Jones Industrial Average. But as we've briefly said on the beginning of the stream, we also did hear from the ECB, and they called an emergency meeting because, and I'm paraphrasing here, they're very, very concerned about fragmentation, and they're very, very concerned about the health of the debt market in Europe. These are my favorite buildings here. The facade with the fire escapes, absolutely beautiful here. And supposedly, they have what they call new tools to deal with the instability in the bond market. Now, I don't know what those new tools are, but I mean, the really only other thing I could think about is just buying the debt, right? Action Kids says, someone I know had their flight canceled to Miami 3 hours before it was scheduled. Jeez. Yeah, AK, I mean, to your point, every single flight I've taken this year, and I understand, you know, we're just emerging from a pandemic. I get that. But every single flight that I've taken this year was either delayed, canceled, had like a malfunction in the landing gear, some sort of battery issue, or we have ran out of fuel and had to make an additional landing to refuel to get us back to where we need to be. New York 7A says, I was born and raised on Long Island. Hey, join the club. Good to see you. EBITDA is here. Says, hey Tom, talk about another bloodbath. If it wasn't for my trade in SQQQ in January and having collars on my longs, I would be crushed. Hope you had a good day. Yeah, I mean, I had a pretty good day, but it was a busy day. I'm dealing with a big healthcare deployment. Essentially what they want to do is, so here's the thing about, and we talk about remote patient monitoring and telehealth a lot on the stream, but there needs to be some sort of hardware, right, to house that software. And a lot of the times, which I understand, you have to get it in the budget. A lot of the times, customers tend to want to cheap out on the hardware because, you know, across, if you're going to deploy 50,000 devices, it does add up. But usually the devices that they choose to house that software or act as the hub just to run their RPM software or whatever it is, it tends to have a crazy amount of bloatware on those devices. And in many cases, it's very hard to remove the bloatware. So if they're going on an IoT platform, let's say if they go to a major wireless carrier, wireless provider like a Verizon or AT&T or a T-Mobile, and they want to sign up and put these devices on an IoT platform, it's going to use like megabytes of data, right? It's not going to use gigabytes. Very, very small pings of data, which is normal, but the bloatware runs up the bill because it's automatically, you know, doing the updates, the weather, all that nonsense. So what we recommend is there's actually hardware providers out there, or software and hardware providers, that make devices built for and made for healthcare, specifically remote patient monitoring software, in which case you can hook up like your pulse ox via Bluetooth to the device, so it'll take all of the patient's readings and upload that to the cloud in a HIPAA compliant manner. And that specific device will come, you could white label it, so it won't have any bloatware on it. It'll be really, really clean and easy. But again, it's a premium product, so it costs a little bit more, but it is definitely worth it. So this was about a year sales cycle. I was working with this big customer. I'm not going to say who it is, but it's big. Everybody would know the name. And we're doing a pilot program for 2,000 devices. So we did all the stage kit work. We downloaded their proprietary telehealth software, their RPM software on there. And just as we set out in the proposal, we set the expectations with the customer up front. Their words are, we're going to take our chances because the budget is a little bit tight for this project. Well, all the bloatware ran up a crazy bill. We're talking hundreds of thousands of dollars. So now they want to go back to the plan I originally suggested. But if anybody's familiar with a sales cycle in enterprise, it's not like you could just flip and swap the device or swap the software. It has to go through a plethora of a hierarchy of approvals, which could take an additional 3 months. And then it has to pass legal, and then it has to do all this stuff. So, as I was getting the demand plan ready and going to contact our OEM in China to build these devices, well, guess what? Cost went up 25%, and that's my cost, by the way. So my cost went up 25%. And what do we talk about a lot on the streams? Well, businesses that want to keep their profit margins or their gross margins intact tend to try to pass those cost increases on to consumers. My consumer being the customer. So long story short, that's sort of what I'm dealing with. But I think it'll all work itself out. But the biggest cost, the biggest reason for the cost increase was, guess what? Semiconductors. So the chipsets in these specific devices, since a year ago that I've proposed that specific solution, to do a whole custom build at the factory in China, they're gonna stage kit all the proprietary software. That's about a 25% increase from me, which means to the customer, that's probably gonna be, you know, maybe 40%. So that is why I'm tardy on the stream, everybody. I apologize. We are streaming at 9:30 at night. But you know, it's almost kind of nice to start the stream off down here, because look at how beautiful the streets are here. The original cobblestone streets in New York. All the buildings have these beautiful fire escapes on them. It's actually kind of nice. It's kind of nice to walk around down here. Yeah, Noodles like bloatware basically adds. Yeah, and like all this stuff that runs in the background, you're right. Yeah, so Don Smith says Exxon sent a nasty letter to the White House. So they did, and we talked about that a little bit yesterday. So I think everybody should really, really read that letter. You know, I think I actually retweeted the original Exxon mobile letter to the White House on my Twitter feed. So if you want to follow @WalksWallStreet. Because essentially the administration is claiming that there needs to be an increase in investment in order to produce more oil. And sort of Exxon fired back and they're like, hey, we've overinvested. And the problem that we're running into now is the lack of clarity from the administration. Because out of one mouth, and I don't want to get too political on the stream, especially not tonight, my brain is gone. Because out of one side of the mouth, the administration is like, we want to get off of fossil fuels entirely. We want complete divestment from oil and gas. And then now they're like, oh, they need to increase production. So when you're running a business, especially a multi-billion-dollar business, it doesn't work like that. I mean, people think that you could just turn on a switch, flip a switch. Oh, yeah, let's just produce more oil for the next, 5-10 months and then just turn it back down again. It doesn't work like that. It doesn't work like that. But we won't go into all of that. But I think it's pretty self-explanatory why it doesn't work like that. Hey, Pizza Man says iconic New York City with the cobblestone streets and fire escape. That is what I love about the Big Apple. Same here, man. You know, if I had the money, I would love to. Could you imagine living in one of the lofts down here? Like having your own fire escape? Or having like an entire floor to yourself. Beautiful down here. Because at night, the good thing about being down here at night, and you guys could probably notice from the streams, is there's very little foot traffic, which is actually really cool. So let's say you have a dog or something, you just want to go out for a stroll. I would say anytime after 9 o'clock, south of NYU, very, very light foot traffic, which is a big plus. Oftentimes when we stream around 34th Street, Penn Station, I mean, that place is a zoo 24/7 for obvious reasons, right? It's one of the biggest transportation hubs in America. But if you live down here, not too many people walking around, which is good. This intersection is very notable, Lafayette Street. I think on one of our first streams we ever did on the skateboard, I got hit by a car right there. I know, Jay's like, that would be awesome. Hey, Lodi says, hey Tom, just saying hi, hope you're well. I'm doing really good. Doing really good. We are probably gonna go to Chinatown again today. We'll check out the scene on the Manhattan Bridge. We'll check out how things are looking over there. Last night's stream, we actually walked across the Brooklyn Bridge. It looks like somebody took all the garbage out of the garbage can and ripped it to bits. And put it right in the intersection. That's always good. So on last night's stream, we actually walked across the Brooklyn Bridge, which was amazing because now there's no scaffolding on the Brooklyn Bridge anymore. So it's a complete unobstructed view of not only Lower Manhattan with the World Trade Center, but you could also see all the way to the Empire State Building. You could see 432 Park Avenue. You could see 1 Vanderbilt. So if you want to check out those views, feel free to go back to last night's stream. It was awesome. Hey, Ann R is here. What's up, Ann? Good to see you. DeLargo says, I stayed on Canal Loft Hotel. The memories, very cool. Yeah, this is a very unique place to stay, especially if you're not from New York. Usually when a lot of tourists come here, they tend to stay in Midtown, which is you'll just get like the classic touristy New York City experience. But down here is different. Down here is A lot of different cultures, customs, a lot of good food. You know, I actually took a break and got dinner over here, and actually ran into my good friend Ann from New York Life Vlog. So that was cool running into him. I was coming out of this good Chinese spot that I always go to, and he was walking right past me. So I stopped and said hello. It was good to see him. Hey, Quinn says I watch every stream. Thank you, Quinn. Appreciate that. Hey, NMB045 says even Brooklyn Bridge used to have scaffolding. Oh my. Yeah, they did a big restoration on the Brooklyn Bridge. And guys, if it's windy, if you notice that it's windy here, it's because I did not have time to put the microphone on tonight, so I apologize. Rachel Wise says, what's the Chinese spot you go to? I'm horrible with names, but I'm gonna walk past it for you guys. So we're gonna walk past it, but now I'm gonna remember the name. But it's right over here. We'll take a quick detour. We're supposed to head uptown, but we'll go around the block. We'll just do a loop around Chinatown. It's one of my favorite spots in the city anyway. War Walker, good to see you. Welcome. I see the Mighty Bull. Mighty Bull, happy Thursday to you, my friend. Already the end of the week. Already the end of the week. RJ, this is Olaf from Colorado, Tom. Good to see you, RJ. Hope you're doing well. WW says, Tom, you ever go to Flushing to eat? Yeah, so at my old job, before, I guess you could say pre-pandemic, I used to go to Flushing all the time after work with my friend. And my friend, he's probably one of the greatest salespeople I've ever met in my life. Learned a ton from him. He's a Taiwanese. He's originally from Taiwan. Well, let me rephrase that. His parents are from Taiwan. But he's from Flushing. And he used to tell me stories. He's like, Tom, I grew up in Flushing before it was like a massive Chinatown. So a lot of people don't know, in Flushing, Queens, there was a time where there was not an Asian population at all. So he was one of the first, his family, I should say, was one of the first families to move to Flushing and be in the restaurant business. So I would go to Flushing all the time. And there's some really good places for a special soup that is extremely spicy. It's a Chinese soup. I believe you pronounce it malatang, which is a really, really spicy Chinese soup, which I would highly, highly recommend. We're actually gonna pass a brand new place that sells that exact cuisine right here. But I think the Flushing Main Street's a little bit better. If you wanna know how to get there, just take the 7 train. So if you're in Manhattan, you could actually go to Grand Central Station, get on the 7 train, and literally just take it to the end of the line. Just take it all the way to the end. Flushing Main Street. You could actually, if you want to see a baseball game, that's where the Mets play. I think 2 stops before that. But here's where I ate today. Let's actually cross the street so we could see what the name of it is. But I think this is probably one of the better places in Chinatown in my view. Hey, Mohammed is joining us. Good to see you, Mohammed. Oh, I think it's closed because it's so late, but we'll see if we could take a look at the outside. So there it is, 456. So it's 69 Mott Street. So if anybody visits New York, this is a great place. I go, every time I revisit New York or come back, I always come here. Hold on, let me zoom in a little bit so you guys can see. So 69 Mott Street, new Shanghai restaurant. 456. The number's right there, 212-349-9999. That is my favorite place in Chinatown. Hey, XXX is here. Good to see you. We have sunshine after rain. Welcome. Jose says there's a minivan that takes you to Flushing, Chinatown. There's a minivan. Nice. Ah, Jose, you're right. 456 Shanghai restaurant. John W, welcome. Yeah, photos from around New York says Mets owner is Steve Cohen. You know, we talked about, he's a big player on Wall Street too. Back in the day, he did find himself in trouble with the SEC. But we won't talk about that just in case he's watching. Roy S says Tom is starting to forget Becco. You know, that's a good point, Roy, but here's why I've been cutting back on Becco a little bit. Do you ever like really like a restaurant so much where you're like, okay, I'm totally gonna exhaust this place if I keep going here every day? So I think Becco is like a once every 2 months thing now. Because I feel like if I go there once a month, it's not gonna be as good. But check out this building here, very iconic building here in Chinatown, beautiful. You know, I almost like it downtown, Lower Manhattan, Chinatown, Little Italy area, better than Midtown. Because it's one thing to look at all the big, tall skyscrapers, but it's another thing to look at the original buildings. I guess you could call these pre-war, right? With the original scaffolding on there, or I should say fire escapes. I think there's actually a guy smoking a cigarette right there out the window. I just realized that. And in the distance, if you look all the way up here, that is the One Vanderbilt building. And right to the right of that is 432 Park Avenue, which was one of the newer additions, I'd say, to Billionaires Row. Yeah, Action Kid says, I love the way they did the lighting in Chinatown. I agree. Action Kids, do you know what they're called? I think, is it just called a paper lantern, or does it have an actual actual name, like a Chinese name or something like that? Hey, Kerry is here. Says, good evening, Tom. Go Warriors. Good to see you. Hey, Skyrocket Ship says, hey, Tom. Long time no tuning in. Good to see you. Ah, paper lantern. Got it. So this is Elizabeth Street. You know, the guy who just passed us, I used to see him every single day in Penn Station. I think he's unfortunately a homeless guy, but he used to be in Penn Station. I've been seeing that guy for years. Hey, Penelope's here. Says, hey, Tom and everybody. I'm lurking tonight while doing dishes. Awesome. Appreciate that, Penelope. So we're gonna check out the scene on the Manhattan Bridge tonight. If it's not too crowded, and if the wind isn't too bad, let me know about the wind noise because I don't have the microphone. We may just go over the Manhattan Bridge halfway. I want to show you guys some of the sights. You know what? Let me try to plug in the mic right now. Bear with us. Hey, Frank is here. Says, hey, Tom, how do you keep the camera so steady? So we use something called a gimbal. It's like a stabilizer. All right, everybody, I'm gonna put in the microphone. Hopefully it doesn't louse up the stream. All right, here we go. And then we're gonna go over the Manhattan Bridge. All right, testing. Let me know if you guys could hear the audio. The mic is now in, so please let me know if you hear the mic. I don't think you guys can hear me now. Oh, you got it? Okay, perfect. Hold on, guys. I just got to clip the microphone to my shirt. Apologize. I should have done this before. But honestly, sometimes when we start the stream, I get extremely lazy, especially on nights like tonight after the day of work. So I'm like, you know what? We'll go without the microphone. But I'm like, you know what? Oh, a lot louder than before. Nice. Okay. You know, I think we can't pass up the opportunity to go over the Manhattan Bridge because I think there's a slight chance of rain tomorrow. So I'd rather go to the Manhattan Bridge now. Okay, we should be good. So we did the Brooklyn Bridge yesterday, we might as well do the Manhattan Bridge today. Clear skies, partly cloudy, not raining, and we're down here anyway, so we might as well check out the views. Oh, so EBITDA, I wanted to ask you about, you know, we heard from the European Central Bank, and my biggest concern is the bond market. I mean, have you seen the moves in the Japanese 10-year today? It went to Mars, but then the bond markets, the yields, reversed hard. So the ECB says they supposedly have some special tools that they have not used before in order to avoid a complete and total meltdown in the debt market. But we don't know what those tools are. So does anybody have a clue what they may be? Hey Frank, this is Tom. S&P 500 has another 50% to go. Oh, so Frank, you think the S&P 500 is going to go down 50% more? I mean, maybe. It all depends on the health of that bond market. That's why I always say, you know, you should, during the day, and you don't have to look at it, just to have it up there, just create a free TradingView account, and then all you do is just click bonds, and you can see the yields and the prices of bonds. And obviously there's an inverse correlation. So over the past 2 weeks, we've been having a parabolic rise in the 2-year, in the 10-year, in the 30-year. And that means the debt market is selling off. I should start hurt. Oh, the sound is very muffled. Interesting. Photos around New York says 456 Shanghai. What do you get? So I get two things. Number one, I get the pork and crab meat soup dumplings. And number two, I get the spicy chicken with green peppers, which is fantastic. So that is what I would recommend. All right, so here's stop one over the Manhattan Bridge. You can see the very top of the One World Trade Center. And as you guys can see, not really cloudy tonight. You can see some of the clouds rolling by right over the top of the World Trade Center, but besides that, hey, Abstract Angel Artist. This is rock on, brother. Great view. You too, my friend. Thank you for joining tonight. It's going to be a kind of a chill stream. I'm not going to hammer on the markets or the Fed talk. I think we've been covering that pretty good so far on the stream. And tonight, it was a pretty long day at work, so I think we're just going to chill, have a good time, just kick it, enjoy the views over the Manhattan Bridge. And also, you guys are going to see amazing graffiti. So if you look at the rooftops, notice all the graffiti. It's fantastic. Hey, Raymond, Texas 01 says, hey Tom, this is my old neighborhood. Awesome. Mom of two, Blue Boyd says, love my city. Good to see you. Thank you for joining. I'll give you one more shot of the World Trade Center. We'll continue. Soup dumplings, fried rice, rice cake, Shanghai lo mein. Drunken chicken, says Jose. So as we walk over the Manhattan Bridge, one of the things you'll notice is the lack of light. I think the city should put up more floodlights on the bridge. I know over here we have some, but I think they need a little bit more. It sort of looks like a scene out of Batman. Hey, Michelle McGraw's here. Good to see you, Michelle. Happy Thursday to you. Hey, Taxi Cab says, hey, it's only after 10 p.m. In New York City. Where is everything? Why is everything closing in New York City? I thought New York City never slept. Well, we're walking over the walking bridge of the Manhattan Bridge, so I'm not sure there's much foot traffic here. And I think in just about 2 minutes, we're going to see the train coming over here. But it looks like the N train is right here. It may be delayed. It's actually just sitting on the bridge. Here, check it out. So this is the N train. It looks to be trying to come over the bridge, but it looks stuck. Hey, NMB 045 says, Tom, it's Formula One weekend here in Montreal. Love that. Send us some pictures of that, NMB 045. Delarge says, tech sales looks like a very demanding job. How do you chill out? So it's not that it's an extremely demanding job. It's just that at certain points during a sales cycle, it needs to really be all hands on deck. Especially during the deployment phase. So check this out. Beautiful view here. So photographers that will actually come in here and cut holes in the fence so they could get a better shot. But it looks beautiful from up here. Yeah, Abstract Angel Artist's $1 million view. It really is. Check out those clouds in the back, amazing. So the thing about tech sales, or sales in general, I guess we'll just do a quick overview of that. You know, there's tiers to it, right? So you could be in SMB sales, which is small to medium-sized business sales. Look at these people delayed on the train. You can see the lady with the headphones on right there. So you could be in SMB sales, which is small to medium-sized business, in which case that tends to be shorter sales cycles, high transaction volume. Then you go up the stack to mid-market, where the sales cycles are still probably right around 3 to 6 months. But as you go up the stack to enterprise sales, these sales cycles could take a year. Yeah, Cosmo Scary says the sound in real life is horrible. Yeah, the sound in real life, it like makes your brain rattle around in your skull. It's insane. But anyway, what I was saying is, once you get up the stack into enterprise sales, and essentially enterprise sales is selling into, you know, Fortune 500, Fortune 50, Fortune 100 companies. You know, it's a very, very different type of sales process. And the reason for that is because, you know, if you're working on, you know, sometimes 7-figure deals, there's a lot of moving parts, a lot of decision makers, and a lot of engineering, a lot of legal, a lot of compliance. So instead of just selling to like an SMB or a small to medium-sized business, in which case maybe there's only one decision maker, Maybe it's a small accounting firm of 100 employees or something like that, or 50 employees. But if you're dealing with an organization that has, let's say 50,000 employees as a multinational, the sales cycles are extremely long and they're very, very aggressive because everybody is competing for these deals. So you got to be sharp. So a lot of the times, especially I mainly sell into, I'm not really vertical specific, but my expertise is healthcare. So I choose to sell into large nursing homes, large home healthcare agencies, hospitals, and things like that. Just because I'm very, very well versed in the space, and I've been selling anything from EVV, electronic visit verification software, EMR software, and all different types of solutions in terms of traditional IoT, temperature monitoring, and really anything. Wireless failover, so we could deploy an entire SD-WAN environment, manage MDM. So we are a full service MSP dealer. So the point I'm trying to make is what you want to do if you're just trying to start off in tech sales. You're usually going to start off as an account executive selling into small to medium-sized business. But in my view, in my opinion, you really, really want to try to get out of small to medium-sized business as fast as you can. And here's why I say that. Because it's extremely, extremely transactional, and you're very prone to burnout as you get older selling into SMB. Your quotas, at my old company, my quotas were monthly when I was selling into SMB. But as you get into enterprise, now you switch to a quarterly quota, right? Because the sales cycles are elongated. Yeah, someone said, or you start out as an SDR or sales development representative, or at some companies they call them BDRs, a business development representative. If you could strive or really, really try to skip that role, I would. But again, that's up for debate. But as you sell enterprise deals, it's good to have an existing book of business and specialize in a specific niche or vertical, because even though you may not be selling something every month, when you do close that deal, these are extremely, extremely lucrative deals. So when you're rolling out a pilot program or something like that, if it goes south, that was like a year's worth of work for nothing. So you really got to be on top of it. Really, really have to be on top of it. So here you can see the beautiful Brooklyn Bridge from the Manhattan Bridge. Hey Gustavo says, hey Tom, it sounds like you know a little bit about IT. Are you looking to pursue a career more in sales or IT? So I am in enterprise tech sales. So I sell hardware and software into the Fortune 500 and Fortune 50. Yeah, Bob was like, that was the 5th train to go by so far, you're right. Hey, Raul says, amazing views, saludos, good to see you. Hey, hey, what's up, man? Barefoot Vlogger says, hey, Tom, good to see you back in my old stomping grounds. I used to take the D train over that bridge to Brighton Beach. Awesome, man. Yeah, Barefoot Vlogger, when I'm back in Florida, we'll have to meet up. So I'm down near Action Kid in Miami. I'll have to come back up to Palm Beach. Definitely a lot more relaxing down there. But I'll be back on Monday if the airline doesn't cancel the flight. Yeah, everybody, check out Barefoot Vlogger as well. He covers the Southern Florida market very, very well. And he's a fellow New Yorker too. All right, check this out. This is one of my favorite viewpoints from the top of the Manhattan Bridge. And last night we were walking over the Brooklyn Bridge, so. Yeah, Edson says this is the Manhattan Bridge. Indeed it is. Oh, the Mets are playing the Yankees. I didn't know that. Abstract Angel Artist, appreciate it. Hey, KO is here. Good to see you, KO. Welcome. Here comes another train. Let's see what it is. It's the N train. A lot of traffic on the FDR tonight. Hey, FredX is here. Good to see you, FredX. So I'm not sure if you guys can see, if you look to your right, this is like a baseball / soccer field, but it may be too dark. Oop, everybody watch your head, you gotta duck. Hopefully you didn't hit your head. So we'll move on to the next spot. We'll go about halfway over the bridge. Hey, life begins at 40. Says New York City is the best. Love the vibe and hearing the subway. I agree. Thank you for joining tonight. I appreciate it. Steph writes, is where are we headed in New York City? So we're going to head back uptown. We're going to head to 34th Street, Penn Station. But, you know, I thought since we walked over the Brooklyn Bridge last night, we might as well do the Manhattan Bridge tonight. But if you guys are enjoying the stream so far, feel free to leave a like on the video and subscribe if you are new. Hey, Kerry says, just beautiful, better than our views here in San Francisco. You know, San Francisco does have some nice views as well. You guys have the Salesforce Tower, Mark Benioff's building. Hey, Dolly Girl Twins says, Tom, what is your take on Elon Musk getting sued? $258 billion over alleged Dogecoin Ponzi scheme. Yeah, I don't think that will have any validity to it. But at the end of the day, you know, that's why I always tell you guys, stay away from all that nonsense, you know. So anyway, yeah, that's why I always say, like, look, stay away from all that nonsense. You know, all the altcoins and the Doge stuff, it's all junk, man. I'm telling you, it's all going to zero, all of it. You know, we've been writing about in the Behind the Street newsletter about the SPACs, the special purpose acquisition companies. I've been warning about them for about 8 months now, maybe over a year. And we just had our first SPAC file for Chapter 11 bankruptcy after it became public not even 12 months ago. So, you know, you guys know my take on all that nonsense. Just stay away from it. Here, check out this boat going by. Somebody says, is that a ferry? You know, it may be one of those party boats that you could rent out. Wow, everybody, check out this shot. Look at the World Trade Center. A cloud is just moving right in between the spire now. So you can see the reflection off of the cloud. It looks amazing. Life begins at 40. Good to see you. Hey, Andre Brown, welcome to the show. Good to see you. Yeah, barefoot vloggers, like perfect night in Gotham to see the bat signal over the skyline. We may have to edit that in there. Hey, buy the book. Good to see you. Welcome, Ebit Da, Muhammad, Matthew. You know, I could just stand up here all night and just relax. Hey, EBITDA, this is Tom. What are your thoughts on Atlassian? I used to have a monster position in Atlassian in which I unwinded the entire thing about, I think it's 6 months now. So I actually owned Atlassian at IPO. And I think that was my single best trade of my life. It helped me buy my house in Miami. But with this big tech sell-off, you know, one of my major rules, and this goes back to what I always tell everybody, Paul Tudor Jones is regarded as one of the greatest investors of all time, as well as Stanley Druckenmiller. And anytime you have a security of any kind cut through this 200-day moving average on extreme volume, you got to pull the ripcord and you got to blow the position out. Or else you'll get caught down 70%. All these major tech stocks, even though they may have good fundamentals, when a bear market comes, you got to get out. You know, if you're managing a portfolio, but look, in my retirement account, you know, I just dollar cost average into the S&P. Yeah, Matthews, his Money Master the Game by Tony Robbins is a good book. He interviewed Paul Tudor Jones. I read that book. Very good. So this is cool. As you guys can see, they have this fence up here, but a lot of the New York City photographers will cut a hole in it, so it allows us to get a really nice view of the skyline. I may have to take a screenshot of this. Hey, Christina's here. Welcome, Christina. Says there's something so soothing about the sounds of the train, like jet noise. Yeah, and I think my microphone does a good job of mitigating that noise, but I can tell you, if you're up on this bridge, it's not too soothing, but I think in the microphone it may dim the noise a little bit, but I agree with you. Wayne McKay says, Tom, do you think Bitcoin will hold the 200-week moving average or fall to 10,000? I'm not sure, but my target for Bitcoin has been the 200-week. One of the things about the cryptocurrency space is, and we've been talking about this for a while, so you guys know a lot of the alternative coins or the altcoins, I don't mess around with those things. I think at the end of the day, the SEC is going to make a decision and probably rule that those altcoins are securities, in which case, if you are soliciting unlicensed or unregistered securities, that's not a good look. Again, I could be wrong, but I stay away from it. Bitcoin, on the other end, I do have an allocation to, and usually every time when we get around to, you know, the 200-week, I will add to my position, because the way I think about Bitcoin is how I think about gold or silver, right? Gold or silver doesn't have any cash flows, right? It doesn't have any earnings, but over time it has preserved your purchasing power, preserved your value. So I think as a part of a portfolio, and again, you guys may differ, it doesn't matter, but I think Bitcoin is a necessary part. And usually, if you look at the data, where you add, or where long-term holders add, like some of the miners and things like that have to manage liquidity, is right around the 200-day. The same thing happened in 2014, 17, and the like. But the thing is, Bitcoin is such an illiquid market. Like, you guys got to understand, I think it's under like $1 trillion now. And I know I say $1 trillion like it's nothing, but in the grand scheme of things, in global financial markets, $1 trillion is nothing, okay? So a lot of the times with these unregulated exchanges, what they do is they offer hedge funds and different investment funds extreme amounts of leverage. And what happens with that is they'll get extremely overzealous, and they'll leverage like 100 to 1, 50 to 1 leverage. Hold on, we'll let the train go by. So some of these unlicensed exchanges, like overseas in China, Japan, Korea, they'll offer ridiculous leverage, right? So before it was like I think one exchange offered like 100 to 1 leverage, and which anybody, that's like ridiculous. So what happens is you have an illiquid market with extreme leverage. So when the market starts to unwind, it unwinds like a ridiculous amount. So I think that's why regulation is actually a good thing in the space, because I can't go to Charles Schwab and say, hey, I want 100 to 1 leverage, right? So this causes a lot of liquidations, and there's actually a lot of big cryptocurrency hedge funds that are now going bust and are unwinding. So what I think is going to happen is a lot of the more risk-averse crypto funds are going to be purchasing the assets of a lot of these other funds that are going to go bankrupt. So you're going to have a lot of forced selling here. So could it go below the 200-day? Yeah, probably. But historically, the 200-day moving average is a 200-week moving average. Has been a good entry point if you're stacking and holding long term. Now, there's many people in the chat that think, I gotta move over for this guy. There's many people in the chat that say, hey, all cryptocurrencies are schemes and scams, Bitcoin is a scam, and that's fine. I think it's good to have that, difference in opinion. But just from the research that I've done, and I've been doing this a long time, I do have an allocation to Bitcoin. But I always never keep it on any exchange. You have to manage the private keys yourself and pull it off into cold storage. So this is going to be the last view we see, and then we're going to head back to the Manhattan side. But man, look at this view. You could actually feel the bridge shaking. It's crazy. Hey, War Walker, good to see you, my friend. Always a pleasure. All right, let's head back to the Manhattan side. I got to get the Long Island Railroad back. Flat Smacks, do you use the Ledger Nano S? Hold on, let's let this guy pass. Yep. I don't. I actually use the original old paper wallets. But speaking about Bitcoin, one critic of Bitcoin and cryptocurrencies is Peter Schiff. But I happen to respect Peter Schiff a lot. So Peter Schiff is the CEO and founder of Euro Pacific Capital and Euro Pacific Bank. And I think he's a great economist. Fantastic economist. And even though I may disagree with him fundamentally on Bitcoin, I think the vast majority of my economic framework aligns with the the opinions of, let's say, like a Peter Schiff. However, in terms of trading equities and trading stocks, we also differ. But as a true economic framework, we agree. So if you guys want to check out a really good podcast, check out the Peter Schiff Show. You'll learn really about the workings of an economy, about free market capitalism. You'll learn a lot about central banking and the Federal Reserve. But the thing is, that I think the reason why Peter Schiff's funds have underperformed the market so severely since the lows of 2008 is because Peter Schiff was not investing and trading in the appropriate economic climate of the day. And here's what I mean by that. So Peter Schiff is one of those end the Fed guys. He's against all the quantitative easing. He's against the artificially low interest rates, which is a policy we've adopted ever since the lows of 2008. But it's one thing you could disagree with it, like I do. But in the investment business, this is literally the business of money. And your job as a portfolio manager is to make the number in your account go up. We'll wait till the tank goes by. So based upon those parameters, you know, a lot of the portfolio managers who made a ton of money during the bull market that started at the lows of 08 understood, look, the Fed is going to print a bunch of money, so that's going to make PE ratios go to the moon, and there's going to be a lot of PE expansion. So a lot of growth companies that are able to take on debt very, very cheaply are going to be able to have the capital and the liquidity they need to expand the business and grow their EPS. So even though PE ratios and valuations can get extremely, extremely out of hand, in a climate of quantitative easing, you sort of have to follow the trend. So a lot of Peter Schiff stocks, like the gold stocks, didn't perform well. Hey, Sabrina Fair, good to see you. Welcome. Taxi says, Tom, what is your view on stablecoin? I would stay away from all that stuff, like the Terra Luna. If anybody's offering you a guaranteed rate of return of 8% or more, I mean, it's sort of, you have to follow the old principle of if it's too good, if it sounds too good to be true, it probably is. NMB 045, the reason I do that is because if you leave it on the exchange, you don't have your own private keys. But if you guys are enjoying the stream tonight, feel free to leave a like on the video and subscribe to the channel if you are new. We do these live streams 5 days a week, usually starting at 8:30 Eastern Standard Time. Hey, low voltage ghost says, hello Tom, what's for dinner tonight? Well, I went to Chinatown and I ate at a pretty good Chinese restaurant. We are at the top of the Manhattan Bridge. We're walking across the Manhattan Bridge going back to the Manhattan side. Hey, On the Run says, hey from Vancouver, Canada. Love that. Love Canada. I may be in Canada later this summer, by the way. So stay tuned for that. NMB 045, I do not believe so. But at the end of the day, if anybody is old enough to remember the Mt. Gox situation, oh guys, check this out, I never knew this. So they actually installed a security camera right here, wow. I never knew there was any cameras up here. Very nice. But at the end of the day, you know, the value proposition that I saw and still see in Bitcoin is that it's unconfiscatable wealth, right? So based upon that idea and that principle, what I want to do is custody my own Bitcoin. If I have it on an exchange and the exchange goes bankrupt, or maybe some rogue employee has some nefarious ideas of the exchange, well, they could just steal all the Bitcoin. And I think that if you custody your own Bitcoin, I think was really one of the only value propositions that I see in Bitcoin, is that it's unconfiscatable. As long as I memorize my own private keys, it's impossible for anybody to steal it or take it. Oops. Hey, interesting architecture. Greetings from Russia. Good to see you. EBITDA says, Tom, where did all the Bitcoin to 500K in 2022 go? Even the Bitcoin to 100,000 go? They are silent. Yeah, I mean, it happens in every cycle. You know, when I was in college, from 2014, well, I entered college in 2014, I think. It's the same thing. And everybody was like, oh my God, Bitcoin went to $1,000 and then it traded all the way down to $100. And everybody's like, yep. You know, I think in every sort of one of these cycles, like, and this is why I talk about, like, a lot of the NFT stuff is total nonsense. But I do see value in NFTs. I get it, I see it. But I mean, a lot of these people were just using it to scam people. I mean, it's just totally obvious. So in any cycle, you're going to have a big washout of all of these crooks. So a lot of this lending platform nonsense, like the Terra Luna stuff, because there is parts of DeFi that are valid and that hold some validity, but there's also some of these you know, platforms that are complete Ponzi schemes, and a lot of the NFT things, you know, there's no utility just because you drew a picture and you posted a JPEG online, right? A lot of that stuff is going to be washed out. And I think a lot of people pony up here and think they're experts in cryptocurrencies or expert traders. So they open up these essentially chop shop hedge funds. And like I said before, they use these exchanges where they lever up 50 to 1 leverage, 25 to 1 leverage. And when they get liquidated and when the market takes a turn, everybody gets liquidated at the same time. So I think what you're seeing right now, and I was talking to one of my buddies who runs a decently sized cryptocurrency hedge fund, and he's like, they're contacting a lot of these large hedge funds, these crypto hedge funds that were extremely levered up, that are now in liquidation phase or closing up shop, and they're buying assets from them for pennies on the dollar. EBITDA says, hey Tom, weren't those companies offering 15 to 20% rates for holding your crypto? Yeah, dude, it's insane. It's nuts. But again, like, people, I think it's EBITDA, to your point. I think people fall for like the get rich fast, get rich quick thing. So they're like, oh my gosh, if I can lend out my money and get 15% yield, I'm going to do it. But I mean, how is that sustainable? But look, I think over the long term, this is just going to be another cycle. It may be an elongated bear market cycle. But the good news is, I think, since the losses have been so egregious and people have gotten so wiped out, the SEC is going to have to do something about this. Right? And this is what happens every time. This is what happened in the financial crisis. They wait till Main Street loses an ungodly sum of money, and then they put in regulations. They're never preventive. They're always very reactionary in their policy. So the SEC will wait till Main Street gets fleeced, and then they'll start to enact policy. So that is coming. Hey, Dan Zhang is here. Hey, what's up, Dan? Says, hey, Tom, what do you think about Michael Saylor's micro strategy? We'll get a margin call if it falls below 20,000. So it's a little bit of fake news. I'm not saying that what you're saying is fake news. What I'm saying is the margin call piece there at 20,000 is fake news. They don't get margin called at 20,000. I think it's more like 3,000. They may have to post a little bit of collateral, but I think at that point that's going to be right around 3,000. But at the end of the day, do I think it's wise to load up your balance sheet with Bitcoin? No. Do I think that every company's balance sheet should have at least some? Yes. Could I be wrong? Yes. But here's the thing, and I had a dinner with one of my we'll talk about I-bonds in a second. I was out to dinner with one of my really good friends, very successful hedge fund manager, and he told me something. He's like, look, when you're thinking about times when you could generate the most alpha, which alpha is, let's say if your hedge fund or your mutual fund or whatever you're running, is you're benchmarked to the S&P 500, let's say, okay? And the S&P 500 returns 8% that year. Any return of your hedge fund above 8% is your alpha that you generate. So usually the most alpha, right, and try not to misinterpret what I'm saying, we'll explore it in a minute. The opportunities to generate the most alpha present themselves when the vast majority of people do not yet understand it. So what does that mean? That means there is significant debate at the time between, is it real, is it a scam, is this all BS? And you're going to have two sides of the aisle really like aggressive in terms of, is it just total nonsense? Is it a bubble? Is it garbage? And you'll have other people on the opposite side of the spectrum say, oh, it's the next best thing. It couldn't be better. and they get really, really irrationally exuberant about it. So, as a trader or a trend follower, if you could say, okay, I see the thesis that Bitcoin could potentially work and actually act as a digital store of value. I do see that value proposition. I also see the bear thesis to say the whole thing could implode, governments could ban it, governments could regulate and kill Bitcoin, or it's a Ponzi scheme and it'll go to zero. Understanding those two theses, those two sides of the aisle, if you can develop your own bull or bear thesis, and even if you lean like 15% bullish, you should have an allocation to it, even if it's 1 or 2%, because, again, going back to the quote, the times when you have the opportunity to generate the most alpha is when the vast majority of people still don't really understand it yet. When everybody understands it and everybody has clarity around it, well, then the price is already priced into the asset, right? Think about buying Bitcoin in 2014 when at a time it was trading at $100. The vast majority of people probably on the stream didn't even know the word Bitcoin, right? And think about that meteoric rise from 100 to at its peak 70,000, right? And you could take that and just substitute X for Bitcoin. You could talk about maybe an alphabet, right? So I remember we were covering in one stream, we were talking about the internet, and there was a really funny interview where David Letterman was actually interviewing Bill Gates on his show. And I understand David Letterman wasn't trying to be malicious towards Bill Gates. His job is to have a couple laughs. But essentially, David Letterman was roasting Bill Gates about how the internet is so ridiculous. So if you type in on YouTube, Bill Gates, David Letterman interview, you'll see it. And he was like, I don't understand this internet thing. It's all nonsense. And now, Microsoft grew into, at a time, a $2 trillion company. Right? So the people who sort of said, okay, I kind of understand the internet. I kind of see how it could be a big thing. But I also see the other side of the aisle's point, or David Letterman's point, where he said, does radio ring a bell? Right? You could just use the radio. I understand their point where it may not work, so I will commit a little bit of allocation. Right? That is where you have the most opportunity for alpha there. Where there's no opportunity to generate alpha is, well, I shouldn't say no opportunity, but least likely opportunity is when everybody knows that, Microsoft Azure is going to grow at 25%, or Amazon AWS is going to grow at 25% compounded annualized growth rate. Everybody knows that, right? Everybody uses Amazon. So I know a lot of people can get extremely turbocharged about is Bitcoin a scam? It's BS. You just, to me, it doesn't matter if it is or not. From the information that I have and the research that I've done, I've concluded that it's not. So I'll put an allocation accordingly. And if I'm wrong, I lose money. And I think if you take that approach, now you've removed all sorts of emotion out of it, and you've committed to an allocation, and you've invested something that you could afford to lose. It's the same thing with equities. I don't know. That's sort of how I think about it. So everybody, we made it to Little Italy. We were just here last night, so we should have a pretty nice walk back uptown. Dom says, how important is understanding technicals in your analysis of a security? If so, where did you learn how to read a chart? Noticed you post some charts on Twitter, and I love charts. So Dom, I think it's pretty important, but here's where it's a little weird. So I would first read the book. Well, if you haven't signed up for the free financial newsletter Behind the Street, in last week's issue, the Behind the Street newsletter, I actually gave everybody my top 5 recommended reading list. So I would check out the book, How to Make Money in Stocks. by William J. O'Neill. And William J. O'Neill, or Bill O'Neill, was one of the most successful position size traders at all time, and he's the founder of the newspaper Investors Business Daily, which was actually just acquired by News Corporation last year for I think $125 million. And charts are extremely important, but fundamentals trump all. But here's the funny thing. Usually the charts will look, if you show me a chart, I can tell you if it's a bullish or bearish chart, but the charts that are extremely bullish will always be the companies with like rock solid fundamentals. There'll always be companies that are compounding out their annualized growth rate at 25% plus per annum. These companies will have extremely high gross margins, pre-tax and after-tax. They'll have at least 25% return on equity. And the reason for that is because the chart is just showing you human behavior. A chart is just showing you human behavior, and institutional investors tend to buy stock in companies that have extremely powerful fundamentals. They're generating a lot of free cash. They're increasing their EPS, or earnings per share, right? So usually, if you see a chart that is just totally obliterated, like a Peloton, if you type in ticker symbol PTON, I mean, it's just a nosedive into the ground. And then if you go back test the fundamentals, well, the fundamentals are egregious. It's burning cash, and the company's probably going to go out of business, right? So therefore, it shows in the chart, and vice versa. Like now, a lot of the oil and gas companies are churning out unbelievable profits, and these tend to be the companies that are trading somewhat near all-time record highs. And I think that's why you see the S&P 500 only down, I say only down, oh my God, down 25%, when the NASDAQ, which is the tech-heavy NASDAQ, is down almost 36%, because the S&P 500 has a pretty decent weighting in the financial sector, as well as energy. Dom says, of course, fundamentals trump charts. Do you ever take a position in something due to technicals? Yeah. So Dom, I would really read that book. You could probably get it on Amazon used for like $1. So it's How to Make Money in Stocks. And then I'd also read Peter Lynch's book, One Up on Wall Street. Peter Lynch was the used to run Fidelity's Magellan Fund back in the day. Bot says, fundamentals and sentiment is all. Stock prices don't move based upon the charts, but the charts move based upon stock price, says Bot. Cindy Foley is here, says good night everybody and be safe. Tom, thank you Cindy for joining tonight. I'm glad we got to walk across the Manhattan Bridge tonight. Textman81 says, Tom, should physical gold or silver be a part of someone's investment portfolio? Well, I can't tell you guys what to do. I'm not licensed to give investment advice. But I don't personally hold any. I hold a teeny tiny bit of physical silver, but that's mainly because I may want to get into like collecting as like a collector. But I don't own any gold. I did say, if gold cracks a new all-time record high, I'll go long gold. But as of now, I have no position. EBITDA says, Tom, so true. That plus whatever your edge is. My company is its BS and research/employees. Mine is insider MNPI, to be honest. Thankfully, size is small and keeps the SEC away. I keep getting these Twitter notifications, and for some reason it keeps pulling up Twitter every time I... Let me turn off Twitter notifications. But I know we really didn't have... we didn't really go into too much of a solid topic tonight because I was just getting crushed at work. But if you guys want to stay up to date on my thoughts on the financial markets, if you scan the QR code every other Tuesday, I will send everybody a free investing newsletter where we cover not only the US equity market, but we cover fixed income, we talk about bonds, we talk about global currencies. So if you want to support the stream in a free way and receive my free equity research, scan the QR code, punch in your email address. It's a good way for all of us to stay connected. Now give me a second, I'm going to turn off my Twitter notifications, but every other Tuesday we'll send that out. All right, team, let's head back up. We still have a long journey ahead. I'll take you guys with me. I'd never leave you all the way down in Little Italy when we have to go to 34th Street. And gas is $5 a gallon. I'd never let you guys take a cab, so I might as well bring all 600 of you back uptown. Also, everybody, another piece of economic news that came out today. Housing starts are just starting to fall off a cliff. So I think we're down about 14% in housing starts. But, you know, I wanted to explore something really quick. And the reason why I want to talk about it is because I'm a newbie. I'm just starting to get my feet wet in real estate. As you know, I acquired my first investment property. So think about this. Knowing that we have limited supply, I know supply of housing has actually been ticking back up a little bit on the market, but as interest rates are going up, I think a 30-year fixed rate mortgage is now over 6%. But let's play this through for a minute and let me know what your guys' thoughts are, because a lot of people are calling for an absolute unmitigated housing crash. You guys know me. I don't think we'll get that. I think we'll get like a 10% haircut. But think about it like this. If housing starts are falling off a cliff, right, and usually that is a good leading indicator, like in a normal market, that's a good leading indicator that housing will go down. But we're already having a ridiculous supply problem. There's not enough supply for the amount of buyers. So in the report today, they said one of the reasons why housing starts were down is due to the prices of commodities. So the materials that go into making houses, right? That's one reason why. And obviously financing costs are way, way up. So what if nobody chooses to sell their home? Wouldn't that, let's say if prices just go down like 10% across the board and there's no new additional supply coming onto the market because housing starts are going down, isn't that going to create more of a supply problem than we already have? So that's the sort of way I was thinking about it today. I could be totally off base. But I mean, think about it. In other cycles, it was a little bit different. And I know the famous last words are "it's always different this time." But if there's a crazy supply shortage now, and housing starts are going down, that means there's going to be even less supply. And let's say if we don't see a wave of defaults like we did in 2008, doesn't that mean supply is going to stay low, or potentially stay low? What do you guys think about that? Twitch ASMR says people pass away every day. There is always going to be new homes for sale, sadly. Interesting. The Real says people were paying $50,000 over ask where I live up till a year ago. Now there's multiple properties in my neighborhood that have been on the market for months with no bids. Wow. Which neighborhood is that? If you don't mind us asking. You obviously don't have to disclose that. SME Media says no, because investors will choose to sell. That's an interesting thought. So SME Media, so one of my friends said the exact same thing. So my friend said, oh, the investors will just dump all their properties. Well, if you think about it, let's say if you're, I don't want to use BlackRock as an example. I think people have been dumping on them too much. But let's say if you're a relatively small investment fund and you were able to lock in really, really low rates, and you have decent cap rates on these properties, right? So let's say the property is cash flowing, you've raised your rents, or you're able to raise your rents on your tenants, you have very, very low vacancy, and the debt you acquired on that property is 3% or less. Why would you sell that property?
I should find out what they're in person.
Right? I mean, I guess the only reason, why would you sell that property at a loss if you acquired the debt extremely cheap, if your tenants are paying, you have record low vacancies, and you actually can have pricing power to raise rents if you put improvements into the properties and things like that. I don't know. You could be right, SME Media. You could be right. Bob says housing prices have peaked. I do agree with that, Bob. I do agree with that. EBITDA says realized profit in 1031 exchange into another one. Depends on the market and your exposure, though. So EBITDA, that's a good point. But think about it like this. If you're going to 1031 exchange into a property, you're not going to pay 3% for debt anymore, right? And if the market is freezing up and you just raised rents to records, right? We got to think about this for a moment. And you guys could be right. I'm just trying to play devil's advocate, maybe a little bit too much, just to get some thoughts provoking here. Hopefully I'm not being annoying. But I think these are all good points. But we just got the CPI numbers out, and rents were up 5% year over year. So if you're a landlord and you know that you just raised your rents and you locked in people for 12 months at the highest rents you've ever had, why would you sell that and 1031 exchange it into another deal where you're going to have to pay 7 or 8% for the loan? The real says go ahead, advocate for the devil. Don Smith says my mortgage is under $800 and can rent property for $1,600 a month. That's fantastic cash flow there, man. EBITDA says, but you can maybe raise more money from LP capital partners or other partners to further grow and move into other markets / exposures and diversify. Good point, EBITDA. Hey, Dusty Cole is here. Good to see you, Dusty Cole. SME Media says in my city, real estate taxes went up 40%. Oh my God. Well, yeah, I mean, if you think about it,
and all we did was fucking.
If you think about it, a lot of newbies that were buying their first home, right? And to many, I'm trying to read all the comments, but I'm seeing a lot of comments that the housing market is cooling down from the time when people were paying like $100,000 over ask, which was totally ridiculous, by the way. You should never, ever do that. You should never waive any inspections, ever. So I think those times are gone, 100%. Hold on, I just missed the comment that I really wanted. So a lot of these people now overpaid for houses, and I hope a lot of them realize that, oh my God, that guy almost got clocked. Jeez. Just wait for the light. I mean, bro, it's 2 seconds. I mean, the assessments, these property tax assessments are going to double on these people. So, in like the Long Island market, for example, my friend bought a house and his property tax bill is $17,000 a year. I mean, and originally, and you guys know, I wanted to buy a property here. I wanted to buy an investment property in New York on Long Island, but there's no way I'm paying 17 grand a year to live on Long Island. You're out of your mind. There's just no way. I mean, I don't know how people do it, but that's a good point. I mean, the property tax burden alone is ridiculous. Yeah, Bob's like, Tom doesn't need to do another rescue tonight. No more rescuing. Yeah, Dollar Girl Twin says potential buyer's remorse. Yeah, you know, Texas has ridiculous property taxes. I was just in Texas. I was in Austin. Hey, Anthony says my Baltimore property taxes are 13 grand. So that's similar to Long Island. Similar to Long Island property taxes. Walter says, hey Tom, what are property taxes like in Miami? The property taxes in Florida are expensive because in Florida we don't have any state income tax. So speaking of that, I just did my taxes. For the first time ever, I didn't have to pay New York state income tax, which was just like, oh my God, a huge weight off my shoulders. But I paid the federal government their taxes, which wasn't fun. But look, you got to pay your taxes. If my whole theory about taxes is like, look, if you owe it, you should pay it. If you truly, genuinely owe it, like if you've done everything, if you've taken all your write-offs, if you've done the right thing, whatever's left over that you owe, you should pay that. I think that's your patriotic duty to do that. I also think it's your patriotic duty to minimize your tax burden as much as possible, but once you've exhausted all of those things that minimize that tax burden, I think you should gladly pay the tax, which I'm all for. And I do, by the way. But Florida has really high property taxes, mainly because they probably have to make up for that absence of state income tax. So I think my property tax bill is around like $4,300 to $4,600 a year, if I'm not mistaken. But then again, I did not do the homestead, and I think next year I'm going to do the homestead, which I will potentially get a 50% reduction off the appraisal value of the house. But I didn't do that yet, so I think I did pay. I'm going to go look it up, and I'm going to send it to you guys in the Discord. I think it was $4,300, $4,600, which is expensive, by the way. FredEx says, pay your taxes or they'll put you in a cage. Yeah. You know, there's only, oh, geez. That's one way to put it. You know, there's two things that are guaranteed in this life. Death and taxes. And at the end of the day, I'd rather pay the taxes so I can just live a normal life, and it's not worth it, trust me. You do not want trouble with the IRS. Anthony, I won't give the exact value because then, but it's under 500,000, under $500,000. Dusty says, and our taxes go to the military fund programs and less fortunate. Yeah, Twitch ASMR says, a fixer-upper in Miami. I'll tell you, I don't want to do it too much. So I do think, so here is what I will say. Let's cross the street here because I want to show you guys the other side of the street. I think the markets that were extremely, extremely red hot during this cycle, so places in Nevada, places in Arizona, places in Florida, I think those markets will come down. And the only reason why I say that, everybody, is because in previous cycles or previous downturns, that is what the data has shown. That the markets that have really, really been red hot, that have gone up the most, those tend to correct. In other markets where you may have not seen much appreciation, like there's still markets in the United States, very niche markets, where homes didn't appreciate 40%. They may have gone up 2%, right? Because nobody wants to live in, you know, the middle of nowhere or whatever. Those places didn't see a reduction in real estate prices. They just go up like 1% a year, 2% a year. But obviously most of the value, I believe, in real estate is the land that it's on, right? There's only so much land in Manhattan. That's why it's so expensive to live here. There's only so much beachfront property in Miami. That's why beachfront houses in Miami go for 40, 50 million bucks. Right, so I really think it's about location, 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 location. But in some small towns in America, they don't have these crazy boom-bust cycles. I mean, the houses will be affordable, but the price appreciation will maybe just keep par with inflation, maybe. Yeah, photos surround New York, location, location, location. I saw a comment, Tom, if you could live anywhere in Manhattan, where would you live? Okay, if I had the money, all right, let's say if money was not an issue, here would be my two top places to live in the city. Number one, Central Park South. For some reason, I'm just obsessed with that area. I love it. Number two would be Soho, like get a really nice loft or something in Soho. I think those would probably be my top two. What about you guys? If money, where would be your top two neighborhoods? Or the Upper West Side? I don't know, maybe I'd buy a brownstone in Upper West Side, but I think if I really had to narrow it down to two, it'd be Central Park South and Soho. Just because Soho is really unique. Dolly Girl Twins says, how can I minimize my property taxes in Florida? Tax saving tip. Number one, make sure your home's initial valuation is as low as possible. Tax saving tip number two, be sure to file for the homestead benefit. Yeah, so I missed the homestead benefit, so I got clobbered with the taxes, but hey, whatever. Nothing I could do. But I think I'm going to do it this year. I'm going to do the homestead exemption this year. Ooh, Kirby says Chelsea easily. Interesting. Atomic Skittles says number one Soho, number two West Village. Love the West Village. Anthony says Park Slope, Brownstone. Yeah, Park Slope, Brooklyn is really nice. Cynthia Beale says Crown Heights. Crown Heights is nice. I mean, if I had unlimited capital, I don't know if I would. But yeah, Crown Heights is nice. Okay, Ryan Royal says Greenwich Village. Yeah. Travis Webb, Central Park West, beautiful. So you want to be right near Lincoln Center. Okay. I like Lincoln Center as well. Hey, Bill is here. What's up, Bill? Says, my theory, Tom, is for them to level real estate playing field, normalizing a 40-year mortgage. Wow. Cynthia Beale says Dumbo. So, Bill, here's something that I thought was interesting, and let me know your thoughts. And this is for everybody in the chat, in addition to Bill. So, Fed Chair Jerome Powell, obviously, he made his speech yesterday, which we covered, but he said something very interesting about the housing market. I'm going to post the link in the Discord, but he said if you were an average, if you're an average young person in America wanting to buy a home, you are going to want a total reset in the housing market. And obviously I'm paraphrasing, but he said if you're a young person in America looking to buy a home, you're going to want a total reset. And I think the question was in relation to interest rates. So is Fed Chair Jerome Powell forecasting and telling everybody, or telegraphing, that their goal is to raise interest rates so high that it just decimates the housing market? I don't know. What do you guys think? Yeah, Billy says that was the highlight of the speech for me. I couldn't believe when he said that, obviously. You know, I'm not like a big, you know how some people, like, they'll bring someone on CNN or Fox News and they'll say, oh, it's a body language expert. I think that stuff is kind of hokey. I could be wrong, but I think that stuff is a little bit hokey. But Jerome Powell looked like a basket case. I mean, he looked so nervous. I mean, God bless him. I mean, this guy has the weight of the world on his shoulders, but I just felt bad. I mean, he looked so nervous. I mean, look what's going on in the bond market, guys. I mean, it's insane. The bond market has been blowing up. I think mortgage-backed securities went no bid 2 days ago. So it's definitely serious times. But he definitely didn't look good. Hey, Sunshine, New York City. Good to see you, Sunshine. This is Tom. I'm in Westchester County. Property taxes are high here too, about $9,000 a year. Wow. So Sunshine, I actually thought they would be a little bit more than that. That's actually not too bad. You know, I was thinking about maybe down the line, maybe in like a couple years, 5 years, buying a house further upstate New York, maybe in like the Hudson Valley area, like Ossining or one of those towns like Terrytown, just because you get a little bit more space and, you know, you have the Metro North and it's like an hour into the city. And I think, you know, even if you buy a duplex or a triplex, you can probably still command pretty decent rents up there. Yeah, Kurt Flirts says Ossining is fabulous. Is it Ossining or Ossining? I always confuse the two. I always confuse those two. But everybody, here's Strand, the Strand bookstore. Very famous bookstore here in New York. Ryan Royal says, I'd like to reset home prices to the late 90s. Kirby says, Tom, the cash buyers pass the expenses to the tenants. Hey, Solo401 is here. Good to see you. Billy says, Tom, I think he means that right now, the number one, he's warning younger people of the housing market, and it's his way of saying prices will come down and normalize by the time rates should follow. Well, I mean, I've been saying this for a long time, and I think everybody on the stream is in agreement. If housing prices actually do come down, let's say 30%, I think over the long term, like let's use a 10 to 20 year time horizon, that's going to be very good for helping the middle class. Because I always revert to the study, but there was a study done, the largest study ever completed of self-made millionaires, first generation self-made millionaires in America. And the vast majority of their net worth came from the equity in their homes. And now it is so unaffordable to get into a home. That means we are going to cull the middle class if housing isn't affordable. Because if you can't, you know, buy a starter home for 300 grand or less, it's going to be pretty hard for the average person to, you know, acquire a piece of property and then over the course of their working career pay that asset off, in which case they have an asset that's worth $500,000. It's going to be really hard. I think America is turning into a renter nation. So to your point, if this actually materializes, yeah, we may go through some short-term pain, but the long-term economic benefits of allowing people to move up from the lower class to the middle class to the higher class. Let's say if you can acquire one property, get that property paid off, and then acquire another property and use that one as a rental for a rental income in retirement. That's not a reality for a lot of people right now, unfortunately. So I think the best course of action, or the best scenario, would be for property prices to come down, so that would allow the middle class to at least reestablish itself. Because as of right now, I think the middle class is under attack. Yeah, Billy says 100% turning into a rental world. Wow, check this out, everybody. Look at that. Beautiful view of the Empire State Building from here. If you guys are enjoying the stream so far tonight, feel free to leave a like on the video and subscribe to the channel if you are new. We go live about 5 days a week between New York City and Miami, and we talk about the economy and all types of stuff. So we'd love to have you here. I've been having a problem with my Zoom. There we go. That guy's a really nice Tesla. Hey, Holo Fuel is here. Good to see you. Hey, CB Matlogs has just subbed and liked. Thank you so much for joining. The more the merrier. We'd love to have you here. So for those of you who didn't get to catch the stream last night, obviously we heard from Fed Chair Jerome Powell. He did go big and raise interest rates by 75 basis points, bringing the federal funds rate to a range of about 1.5 to 1.75%. Projections are that by the end of this year, the Fed funds rate will be around 3.4%. And if that materializes, there's a very good possibility that a 30-year fixed rate mortgage could be going for around 8 to 9%. In addition to that, the ECB, the European Central Bank, Christine Lagarde and all of her pals, did call for an emergency meeting, warning cautious tales about the stability, I was going to say the validity, I guess I could say validity, maybe that's a little bit mean, of the bond market. And obviously not only European bonds are selling off hard, yields are spiking, the same thing's been happening in the United States. That 2-year Treasury yield has been on a tear. That 10-year Treasury yield has been on a tear. But today, yields reversed quite rather hard. But I think the highlight of the whole bond meltdown, the bond debacle, has been Japan. So check out the 10-year in Japan. That absolutely went off on one today, but again, has reversed lower. And this is in sight of the Bank of Japan actually continuing on with quantitative easing and artificially low interest rates, as opposed to other central banks around the world that are actually raising interest rates and starting quantitative tightening. The central bank, the Federal Reserve started quantitative tightening June 1st, in which case they will be unwinding their nearly $9 trillion balance sheet made up of mortgage-backed securities and U.S. Treasuries. So I think the highlight of that ECB impromptu meeting was that they supposedly have some special tools that they can use to keep the bond market in control, but we don't know what those special tools are. And I don't think they could do much to help unless they just start buying assets again, in which case you would really have a big ramp in inflation, which is what we are trying to get under control. But what do you guys think about the ECB's quote-unquote special tools? Hey, Line Sync is here. Good to see you, Line Sync. Hopefully you're well. Texman81 says, hey Tom, I'm showing you my age here, but I remember when banks' savings accounts paid 5%. Man. You know, I think Texman81 has the comment of the night. And here's why. Here's why I think Texman81 has the comment of the night. Because this really just sums up in a nutshell why policies of artificially low interest rates for prolonged periods of time are not good. And here's why. And I know a lot of the economists out there that practice the Keynesian economic practice or beliefs will disagree, but I think that's fine. We can disagree. But when you have artificially low interest rates for prolonged periods of time, that actually punishes people that are trying to do the right thing. So people that are going to work every day and saving their money. Because to Texman81's point, if you could save your money in a bank account, what was that? That yields you 5%, you can really compound out your interest and get rich based upon just saving money in those high-bearing interest accounts. However, when you have continued policy of artificially low interest rates, it not only discourages savers, but it punishes them because they are saving their money and their money is being eroded away by inflation, forcing the average person and investment managers and the investment banks and institutions to hunt for yield out in the free marketplace. And when you have too many people in search for yield, that creates speculative asset bubbles. So why would you leave your money in the bank? Or at the time, why would you buy a US Treasury that's yielding less than inflation when you could just gamble in the stock market and run up all of these companies to ridiculous stratospheric valuations because you have to go on the hunt for yield? So when interest rates are low, that is the main driver that I think of speculative asset bubbles, because people are no longer saving money for investment later. They're like, I have to deploy this capital now into the marketplace because inflation is going to erode away the purchasing power of my dollar. Because if I put the money in the bank, to Taxman 81's point, I'm not making 5% anymore. I'm making like a fraction of a percent. After inflation, I'm negative, I'm underwater. So hopefully when rates normalize, or if they normalize, maybe we'll actually able to make money just by saving and doing the right thing. Who knows? But guys, we're about to see an insane view of the Empire State Building lit up in all red, white, and blue. Love that. Hey, Sally's here. Says, hey, Tom. Good to see you, Sally. Hopefully you had a good day. Hey, Nicholas Dura says, I think the New York wheel will significantly improve Staten Island's economy. Quinn is here. Good to see you, Quinn. All right, we're almost at the Empire. Well, actually, that's not true. We're not almost at the Empire. We're almost near where we can get the best view of the Empire State Building, as we are lit up in beautiful, beautiful red, white, and blue. Yeah, the Real says, hey Tom, you want a risk-free return? Buy stuff you need like food with a long-term shelf life and toilet paper now, and don't pay capital gains on it. Yeah, I mean, I guess you're right, but I mean, I don't know if you could, get rich by arbitraging toilet paper. But I do see what you're saying, 100%. If you stock up on goods and things that you're going to need anyway, as the price of those things go up, you'll be able to save money over time. But you're 100% right. But I'm not sure you could arb your way to a net worth of $50 million through Cottonelle toilet paper. I mean, maybe you can. Hopefully you can. Oh, okay. So for personal use, copy that. Yeah, Maryland, I saw that too. So the FIFA World Cup coming to New York, New Jersey. Did they really select? I think the United States is in the running to host the World Cup. I'm not sure we got chosen. Hey, 48 is here. What's up, 48? Good to see you, my friend. 48 is joining us from the one and only New Zealand. Always a pleasure. Hey, Rick says, why you never visit or broadcast from beautiful Boston? Well, it's not like I probably should, but it's not like I travel the world just doing these live streams. I usually just do them after work. That guy has really nice cruising wheels, by the way. So the thicker your wheels are, depending on the material as well, you get like a really nice glide. You guys have a really nice board. But yeah, I usually just do these live streams after work. So I usually work 50-50 between New York City and Miami. Hey, Daniel says congratulations to the Golden State Warriors on the NBA championship. Wow, I didn't even know they were playing in the NBA championship. Well, congratulations to them. That's fantastic. Somebody says, is Boston beautiful? Yes. Boston is beautiful. My brother lives in Boston. I got to go up and visit him. I haven't had time to do that, but yeah, Boston's a beautiful place. Wow, Marilyn says, yes, it's true, Tom. New York, New Jersey was chosen to host as the host city for FIFA 2026. Wow, that's insane. Well, at least we'll know that the United States will qualify for the World Cup. Yeah, Adidas Shea 29 says Boston is a very walkable city. That you are right. Hey, Lark is here. Good to see you. Well, that's going to be awesome. Maybe we'll be live streaming from the World Cup. I'm down for that. Lark, I appreciate it. Thank you, sir. So here is the Italy sign. So I'll let you guys decide. Should we walk up Fifth Avenue or should we walk up Broadway? I'll let you guys decide. It's the same distance, but I think we'll just get two different views of the Empire State Building. So let us know. Broadway or Fifth? Hey, Don Smith says my sister went to Northeastern. I think that's a really, really good school. Lark Barks is Fifth Avenue. All right, Lark Bark was the first comment I saw, so we'll head up Fifth. Ooh, everybody's saying Broadway, because I noticed the original people that always watch the stream say Broadway, because Broadway has some insane views of the Empire from different angles. But I think Fifth Avenue will suit us just well. But as we get to the corner here, this is Madison Square Park, which is also a very, very beautiful park. Hey, Marilyn, so it looks like your survey people included to vote for the newsletter Behind the Desk. Yeah, so we're going to start that up once I get back to Miami. So it's going to be a crazy travel month for me. So I'm going to fly back to Miami on Monday, and then I have to turn right back around and fly right back to New York a week after that. So we should have our first Behind the Desk stream this time next week, so on Thursday, because I'm actually mailing my desk back to Miami. So right now I don't have my standing desk. During the pandemic, I bought one of those really nice standing desks with the electronic motor on it. So once I have that set up, I'll be able to start up the desk stream. In which case, I think what we'll do, everybody, for the Behind the Desk stream is we'll allocate 1 hour and we'll go through the topics in the newsletter and we'll talk about, the big news in terms of the global macro picture, and we'll do some like idea generation, and maybe we'll even build some financial models together if we have time. I'll show you some of the templates that I use for my DCF models when I build them. I think it'll be a good time. I also want to incorporate a system where I could drop a link in the chat, and if you click the link, you could actually come up and it'll sort of be like a Zoom call. I'm still trying to figure out the best platform for that. I think it'd be a cool way so we could hang out with each other, maybe like an hour a week, opposed from the traditional walking streams. Man, I think this is my favorite color scheme on the Empire State Building. If you guys like this color scheme on the Empire, hit the like button on the video. I think this one and the color scheme during the holidays, like Christmas, are my two favorite color schemes. So check that out. The clouds above the Empire are reflective of the colors on the Empire State Building, which is awesome. Yeah, Derek Hammonds was just thinking that. Yeah, so as we get into winter season, well, let's not think about that yet. We'd actually just emerge from it. But the color scheme on the top of the Empire is going to look amazing during the holidays. But I think it looks nice now. This is like more 4th of July-esque. You know, I can't wait until the Aston Martin building is finished construction in downtown. Excuse me, I gotta get some water. In downtown Miami. That building is going to look amazing on the skyline in Miami. Yeah, Jason and yeah, it looks like a creamsicle for sure. Anybody, just out of curiosity, let's do a quick futures check. Where are futures right now? If I had to guess, I think we're probably positive. I wonder where the S&P 500 E-minis are. Hey, helping the children in New York says hello from South Ozone Park, Queens. Hey, that's where my grandmother's from, so right there near John Adams High School. I'm not sure if that's close to you, but Ozone Park, very nice. Hopefully you're having a good Thursday. All right, we're up 23. Up 23. So that means we're probably gonna potentially gap and then get hammered into the close tomorrow. We'll see. But again, if you guys are on TradingView right now, check out the movements in the bond market that we've had. Like really, really crazy stuff. I mean, these are not normal movements in the bond market. JF says, I can see Tom's non-walking live stream being like Dr. Claw from Inspector Gadget. We just sit back in the chair. That's hilarious, dude. His hand in the computer desk and a cat. We will have cats. We will. That is a that's actually a prerequisite for the stream. If you do not have cats, you're actually not allowed to join the behind the desk stream. Marilyn says, did you hear about the poor guy who died today? His foot got caught between the platform and the subway door. Oh my God, I did not hear about that. Oh man, it's always something. The city needs to put more safety precautions on the subways. I mean, it's almost embarrassing. All right, everybody, 32nd Street, Koreatown. Hey, Tony Lagos, our pal from Australia. Always good to see you. Hopefully you're doing well. Thank you for joining. So I think this is 5th. So we'll walk through Koreatown. I like walking through Koreatown. Oh man, look at all those rats. Whew, crazy. I mean, if I see 1 or 2 rats, it's not bad, but when you see like 10 of them fighting each other for like a piece of meat on the subway, I mean on the streets, it's not good. Definitely not a good feeling. Well, the reason why we have rats is because of this.
Hey, you know where Sing Sing is?
No, man. Sorry, man. Sorry about that, dude.
It's all good.
Sing Sing. That does sound familiar, though. Sing Sing. I don't know. Maybe Photos from Around New York knows about it. Maybe it's some sort of like a rooftop bar, potentially? I don't know. I know, I'm just trolling the guy. I was about to give him the address of the Federal Reserve, but I just wanted to say, yeah, I don't know. I think this is probably wow. We very rarely look at this view of the Empire State Building. That's a really nice view. All right, this is H Mart, one of my favorite Asian supermarkets in New York. To my surprise, I actually have one out on Long Island. I never even knew that until you guys informed me of that in the chat. So if we walk a teeny bit further, we're going to see one of my favorite views of the Empire. Yeah, so I think Sing Sing is, it's either like a rooftop bar or he was just trolling. Because the first thing that came to my mind was that prison in upstate New York. But yeah, I think this is probably top 5 views of the Empire right here. Wow. So Dolly Girl Twins says, Tom, since the start of 2022, the Big Apple has seen its worst infestation since 2010, the first year that rat sightings records were made public online. I mean, sometimes I see so many rats that the rats are literally fighting amongst one another for like a piece of food. And you literally see a big ball of rats, like a giant ball of rats scrounging around, scrambling for food. Yeah, 267 says, love my city, but hanging out in Florida for a few weeks needs to decompress. Agreed. I think that's why it's the best of both worlds, being in Miami and New York. You know, not for nothing, waking up, there's nothing like waking up in southern Florida. It's sunny out. There's all birds flying around. It's nice. It's not crazy. It's nice, I'm not gonna lie. Here's another good view of the Empire. Ooh, time check 11:55. So the good news is we're right near Penn Station. I think I'll make my train. Find out where his hive is. Says Palmetti's. Yeah, FedEx's ball of rats and trash tornadoes in New York. But everybody, tomorrow is Friday. I'm usually not one of those thank God it's Friday people, but today in particular was a doozy at work. But all progress, doing good, all progress. But tomorrow, I know I say this 1,000 times, we may start the stream earlier than normal, and we may be streaming from the Upper West Side, because I want to walk around the Dakota building. I want to walk around Central Park, and I also want to do a deep dive into the housing report that came out today. So housing starts actually fell off a cliff, down 14%, but we didn't get a chance to talk about it in that much of detail today. But we are going to go into the detailed report on tomorrow's stream. But this week was crazy on the stream. We covered a lot of good conversations. So I appreciate you guys joining. Next Tuesday, we will have the 23rd edition of the Behind the Street newsletter coming out. So feel free to sign up for that. Also, the first week of July, I have some news. I'll announce it later, but I'll announce it for you guys here. We do have some news. So, the first week of July, I think I'm gonna launch the Behind the Street newsletter on Product Hunt. So when we do launch on Product Hunt, my ask, if you guys could help us out, would just be to go over to the Product Hunt page and just upvote, because we're trying to rank #1 on new products. Because essentially my vision for the Behind the Street newsletter is I want to, as it grows, I want to be able to hire an employee to write about specific niches. So I think I'll continue to be the markets writer, but I want to have one other person with a quantitative background do a quantitative report, and potentially down the road develop proprietary software, and hopefully we could sell that to banks and institutions. And then I want to hire people that have an extensive background in enterprise tech or software, software engineer or investment banking, to write reports to help you guys out for best practices of how to get jobs or careers on Wall Street and in tech. So I think if we launch on Product Hunt, get a bigger reach, it'll allow me to do that, bring on a couple people, and then hopefully we will be able to land and expand that way. Because the #1 goal is we want to make the content, quality institutional level content, free for the masses. I am a huge believer in free education. That's how I learned. But there's a lot of information out there that is horrible that people should not be listening to. So what we want to do is we want to offer institutional level equity research for free. But the way we need to do that is grow its scale. So maybe you just run ads instead of charging people to read it. We can have it completely free for the world to see. But more on that later. I got to catch the train. Thank you for walking across the Manhattan Bridge with me, everybody. Appreciate it. We'll be right back here tomorrow at 8:30 Eastern Standard Time. But until then, we'll see you later. So photos from around New York. XOXX Bob, thank you so much. Yes, Bob, we'll talk about I-bonds tomorrow. So if you guys want to subscribe and sign up for the Behind the Street newsletter, if you scan the QR code, every other Tuesday we will send you a free newsletter that covers the U.S. equity markets, emerging markets, fixed income, the housing market. So if you want to support the channel in a free way, punch in your email, join us, and we will see you tomorrow, 8:30 Eastern Standard Time from the Upper West Side. But until then, the mighty bull, have a good night wherever you are, because there's always a bull market somewhere, and you just need to know where to look. And happy Friday, everybody. See you tomorrow.